Hey traders, happy Friday. We made it through another week, although it was a shorter week, so it was a little bit easier to get through. Now, I was really expecting some weakness this week and didn't really get much of that. That doesn't mean that we're out of the woods yet. Let's start off with the Qs. So here is our week right here. I'm showing you the daily chart, but actually started a little bit too over. Okay, so 4 days right there. So we actually ended up moving higher overall on the week. Not bad. However, NASDAQ is still below its daily 21 right there. Kind of flirted with it a little bit and then got a little pullback. So yeah, couldn't quite make it. Let's move over to the SPX, which does continue to look better, but still not great. All right. So if we look at this little helicopter right here, that tells me that the moving averages are mixed. They're not stacked positively. They're not stacked negatively. They're just choppy, which if you just look at the chart, I mean, you can pretty much see that we've just been all over the place. Really been stuck in this range between 6,800 and 7,000 really since like Thanksgiving. So just kind of going back and forth. We did manage to get a tiny close above the daily 21. So that's always a good sign, but can we stay there? Not so sure. Couple of other things that I want to point out that happened this week in SPX. A little bit of an outlier week and outlier day. So we'll start with my weekly quant pivots right here. Now, if you've seen any of my other videos on the quant pivots or any of my other Friday videos, this is something that I talk about quite often. It's these lines right here, H1, H2, L1, L2. We're looking at the weekly quant pivots. So this is just for this week's period. Next week, we'll get a whole new set of levels. But what typically happens is that price typically stays within the H1 and the L1. It might leave one of those areas, but it's even more common for price to close that period within that range. You can see, however, that today, because it's the end of the period, we actually closed above that H1. How often does that actually happen where we get a close above the weekly H1? 5.7% of the time. So you can see that that is incredibly rare. Now, we put on in the small lot trading room, we put on a call credit spread on Wednesday when price initially breached above that level. Yesterday got a nice drop. Some of us got out for 50%. Some of us held into today's close and ended up losing the debit. Fortunately, it was a small risk. So anybody who held into today's close, small loss. But all this to say that what happened this week is rare. That was a really bullish move that we got. So let me switch over to a different chart, because not only did we get an outlier week, we got an outlier day. So I'm going to zoom in just a little bit on this daily chart. You can see these long lines. That's just what I showed you a moment ago. These are the weekly quant pivots. We closed above this weekly H1, which was at 68.93. All right, look at these lines right here. These two little red lines that are within this candle, okay? These are the daily quant pivots. So these are, that's the H1 and the H2 for the daily. We closed not just above this H1, we closed today above the H2 as well. How often does that happen? So a close above the H1 only happens 21% of the time. Close above the H2 only happens 7.7% of the time, we got both of those. So again, on the weekly time frame, really it was an outlier. Daily time frame, same thing. It was just one of those rare days. But I want to point this out to you because it's important to remember that no indicator is perfect. Nothing works all of the time, 100% of the time. That is why we need to, whenever we're testing something out, a strategy or an indicator, we want to look at 25 to 30 trades at a minimum before we decide whether or not that strategy works for us, okay? Because there's always going to be some losers. If you ever find an indicator that works 100% of the time, you let me know, because I will be the first in line to buy it. But anyways, nothing wrong with this at all. I'm just pointing out that every once in a while you get those outlier days, those outlier weeks, and we got it this week. So let's move on. So what am I looking at for next week? All right, so a couple of things. If we look at the Stock Traders Almanac, this is something that I reference every day, every week, every month. Again, it's not a crystal ball. I want to be so clear about that. It is not a crystal ball. It is telling us statistically what tends to happen based on historical data, okay? So, and you can get this on Amazon. It's by Jeffrey Hirsch. It's called the Stock Traders Almanac. It's really, really useful just to look at seasonal trends, but also daily trends. Okay, so Monday, statistically bearish. Doesn't mean that we are going to go down. And if we do go down, could only be by a penny, right? If it's by 1 penny, that still counts as a bearish day, all right? But statistically bearish on Monday. And because we did close so much higher than is expected based on the quant pivots today and for the week, makes sense to me that, yeah, we could get a little pullback on Monday because maybe we just overshot a little bit, all right? Not only that, John Carter, if you're in our Mastering the Trade room, you may have heard him talking for the last couple of weeks about how he has some cycle timing for Monday, Tuesday, Wednesday of next week, where he's also expecting a little bit of a pullback, okay? So let's take a look and start to develop some sort of a strategy if that does happen, all right? So if we do get a pullback on Monday, here's my plan, because also going back to the almanac, Wednesday is statistically bullish. So I would like to use a pullback on Monday or Tuesday, assuming it's not too much, but I would like to use that opportunity, if we do get a small pullback on Monday or Tuesday, as an entry to go long into Wednesday. I would like to target 69.25. And the reason why is because one thing that I have been noticing in Spot Gamma's trace, if you're not familiar, Spot Gamma is another service that a lot of us traders at Simpler like to reference. Trace shows us where positive and negative gamma are within certain strikes, okay, of SPX. There has been a lot of positive gamma building up at 69.25. One thing that I often see is that when we see that positive gamma building, but it doesn't get hit that day, usually gets hit within the next couple of days. So that's what I would be targeting for Wednesday, 69.25. I like the idea of doing a call butterfly in SPX for Wednesday's expiration, Wednesday, February 25th, and I would like to make it 25 wide. So that is 6,900, 69.25, 69.50. That gives us a big wide net. All right. When I was looking at it earlier today, those butterflies were costing about $250 to $275. I think, with a pullback, should absolutely be cheaper than that. I'd love to be able to pick it up for $2. Okay. My plan on that if I do get that butterfly, I will scale out. If it hits a double, that's if price goes in my direction, I'd like to take it off for a double, all right? If it doesn't work, I'm okay risking the entire debit. That is very standard for me with butterflies, is that I will risk the entire debit. I'll just let it go to zero, because usually by the time, with a butterfly, by the time you know it's not going to work, typically, it's at a full loss anyways, right? If you're at a partial loss, a lot of times they can come back, and I've seen that happen. So that is why with butterflies, I'm willing to risk the entire debit paid. So if you want to get into that trade as well, assuming that we do get a nice entry on Monday or Tuesday, just size accordingly. Okay, if you like to take things off for a 50% loss, for example, then maybe just do half as many butterflies as you normally would. Okay. All right. What else am I looking at for next week? So, full disclosure, I'm really into just trading SPX right now. I do have a few tickers that I have made an exception on, but while SPX is choppy, while the NASDAQ is bearish, I'm just going to keep my swing trades very, very limited. And I'm going to be really picky, and I'm going to size down. So the majority of my trades right now are in SPX. They're either 0 DTE, 1 DTE, 2 DTE, or 3 DTE, all right? But that doesn't mean we can't look at other stuff and see if anything fits, all right? So let's go back to Lamb Research. This is one that I actually mentioned last week in my video, and I ended up getting into it in the small lot trading room. This is a trade that I'm in, and I alerted it to our members in the small lot trading room. Just as a reminder, if you didn't see my last video, or if you don't remember what I said, that's okay. Most of the time I don't remember what I said either. I have to write it down. But look, beautiful, beautiful ideal squeeze in a nice bullish uptrend, okay? And it's starting to come off of the daily 21. I am targeting this fib extension up here at 270. And what I did is I got a call debit spread for the March monthly expiration. And let me show you what that trade looks like. Let me just bring that up really quick. So I got the 260, 270, call debit spread. Now we paid, I believe, 260 for it. It's only at 277 right now. Honestly, it's fine to get it all the way up to 330. Rule of thumb with a spread is, for me, I don't want to spend more than 1/3 the width of the spread. So since this is a 10 wide spread, you can pay up to 333, and I think that's totally fine. Still well below that budget. So I don't think it's too late to get in if you're not in and you want to join me, all right? Where will I take the trade off if it doesn't work? If it gets 2 daily closes below the daily 21, I will just cut the trade. But so far, so good. It's up, I think, about 13%. So we have some tiny profits, but which is a good sign. I'm obviously happy that it's going in the right direction, but it's not too late to add if you want to join us. All right, next thing that I would like to look at is WDC. All right, so this is another one that has a beautiful ideal squeeze, bullish uptrend, and it's coming right back down to the daily 21, which is a great sign, okay? Here's what's an even better sign is, even though had a little bit of, well, it ended up flat on the day, slightly higher, but for the most part, flat on the day. But you can see this wick right here. It did, try to make a move higher and then came in a little bit, but look what happened. It's holding this tree line, okay? So as long as that can act as support, I think that's a really, really good sign. Now, what would I be targeting in Western Digital? I like this fire line right up here at 322. We can call it 320 just to round it out. But those fire lines can really act as resistance, and it's above +2 ATR, so that gives us enough room. Now, if you want to kind of hold it and see if price can bust through, don't let me hold you back. But for me, I've seen this enough times where price will hit its head on these fire lines and then just come all the way back down. So I'm getting a little bit stricter with where I take my profits as price does come up to those fire lines. By the way, if you're not sure what a fire line is, it is one of the levels within the voodoo lines indicator that we have at Simpler Trading. It's one of my favorite indicators. I use it all the time for targets. So that's what that is. That red line isn't something random that I drew on my chart. That is part of the voodoo lines indicator. So it's Friday. What do we always talk about on Fridays? Reflection, right? Go back through your trades that you placed this week. Look at what did work. Look at what didn't work. Do less of what didn't work and do more of what did work. Really write it down, even if it's just on a piece of scratch paper. You don't have to have a dedicated trading journal, although I do think it's very helpful if you do. If you don't, and you're not into that, that's fine. Write it down on a piece of scratch paper. What did not work well for you this week? And then what did work really well for you this week. One of our members at the close today in Small Lot Trading Room, he told me, I am done with end of day butterflies. They just never pay off for me and they end up draining my account more than building my account. And I said, that's perfect. Look, there's nothing wrong with end of day butterflies. I do them all the time. Allison does them. A lot of us do them and they work out well. Sometimes what works for one person or for one trader doesn't work for another trader. So it's really important to self-reflect and look at what doesn't work for you, even if it tends to work for a lot of other people. For me, earnings trades don't really work for me. So I just leave it to those who do it really well, and I find other ways to make money. So go back through your trades of the week and really try and hone in on what is working for you and do more of that. I hope you all have a wonderful weekend. If you have any questions, please feel free to drop them in the comments below, and we'll see you in the trading rooms next week. Thanks, y'all.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me